All right, welcome to another edition of Gino Gems, where today I break down BPI, Bullish Percent Index, Bullish Percent Indicators, what I like to call it. And this is really, this is not just a gem. This is something everybody should use because number one, I always have 20-day moving average. That's my line in the sand, my line of demarcation. But one of the rules I really strongly live by is I let the sectors drive me. Where's the strength in the sectors? And, we do this all the time in tackle trading. We go through the major sectors, like who's leading. You could do this with RSI, like utilities has the strongest RSI. You can see that trend there, how steep that trend is. Its relative strength compared to the price it was 14 days ago or whatever it was is the strongest versus, let's say, financials. Financials has a RSI of 72. And it's also going up. Then you get to these lower RSIs, and they're just not, you can see, just doesn't have the gusto or the strength, the relative strength as the other ones. You can see the angle is barely going up here. So, 50 is considered neutral. Higher above 60 is almost always bullish. And we use these little tools. But now, when you're looking at sectors, there's one thing you have to remember, especially tech. It's market cap weighted. It's market cap weighted. So when I'm looking at this, yes, it's bullish, but how do I know tech isn't just Microsoft and Apple doing it? This is where the BPI comes in. What is the BPI? There's a lot of places to find it, but where I like to get it is basically stockcharts.com. You just go to the market summary page, or you just type in stock charts, market summary, anywhere. You go to the bottom over here, and we look at this all the time in the lounge. The very bottom, this almost forgotten indicator, which has been around forever, was actually partly developed by Charles Dow himself. Basically, it is the definition of a bullish trend. To make this easy, here is the S&P, here's the NASDAQ 100, here's the S&P 100. Bullish percent means simply this: how many stocks in that sector are making higher highs and higher lows, which it means how many stocks are in a bullish trend. So the S&P 100 means there's 100 stocks in there. 83% of those stocks are making higher highs and higher lows. So when it gets over 50, that means it's the majority are bullish. Again, not market cap weighted. Just 1-to-1, everybody's got the same count. It's a linear weighting, not market cap. But now you get down here to like gold miners, only 10% of those stocks. Now, each one of these are ETFs. So this in itself is an internal indicator. Number one, I like to look at this because the majority of sectors are over 50. Majority of the stocks are over 50. That means more than 50% of the. So let's give me a little example. Do I want to do energy and look for bullish picks, or do I want to do gold miners? Because when I was looking over here, energy, as I'm small, it's had one of the weakest bullish trends. Only thing weaker is gold miners. So which one has the most bullish stocks in there? Because you could be searching quite a few stocks to find a bullish trade in gold miners. So I go, well, this is coming off a bottom, but when I go look at the BPI, only 10.3% of its stocks are bullish, which means 90% aren't bullish. So really, you're going to have to dig deep to find that gold nugget, little pun there for the gold miners. But now if I look at energy, here, 71% are still bullish. Even though energy doesn't look like it has as great as an uptrend, it's easier to find bullish stocks in here. So I would put a trigger here or on an energy stock that I see in there. So I can dig deeper to find strength in a sector, also last and third. So not only is it an internal indicator, not only does it show you which sector has the most bullish trends, or if you're looking for bearish, there you go. It makes it easier to find. But if you put it in order by the close, it tells you basically the old school way of doing things was this. Pick the top 3 sectors or industries. And right now it's utilities, industrials, and transportation. And that's defensive, that's cyclical, And that is part of industrial right there. So that's the transportation. This tells you where the strength is. So if you break down industrials, you're going to find a lot of transportation stocks in there pushing that. Then in the growth, you have tech. So I have my 3 top sectors, and they're outperforming the S&P. So it really just right away within seconds, I could focus into which stocks are really kicking it. And finally, you can even look at, like I put up here, the S&P 100. When it crosses 50 to the upside, that's your trend signal on any sector or the markets. So when the S&P broke that 50 right here, I said, oh boy, here we go. Get ready to go bullish. Just a heads up on trend changing. A lot to be said about BPI. I could talk all day about it. Just add it to your watch list, sort it, look at your sectors, see what BPI, it really saves you time. And that's what Gino's Gems is all about. Saving you time, making your trading life easier. That's it, guys. Again, this is Gino, Tackle Trading.